Want to know about one of the main ways to build wealth? Stay tuned to learn more. Hello, and welcome to the Wealth Minded MD podcast with your money best friends. I'm Dr. Brittne Helford.
And I'm Dr. Lisha Taylor.
And of course, we're here to help you build wealth and make good money decisions so you can create the life you desire with more control over your time. Now, a word from our sponsor. Hey, Lisha, one of the most important financial tasks we do as doctors is protect ourselves, which means getting the right insurance. I recall purchasing my insurance policy just a few days before I graduated from residency. What was your experience?
So I got my insurance when I graduated from medical school right before I started residency. I actually called a few agents, but I had the best service from Pradeep Auto at PKA Insurance Group. He was super responsive and personable. Unlike some of the other agents, Pradeep actually got me quotes from all the major companies and actually took the time to explain the nuances in each of their policies. What I loved most is that he wasn't just this way for me. Whenever I would send one of my friends to him, he would not only speak to them, but he'd also let them know where to go or who to contact if there were better options or discounts available.
At PKA Insurance Group, Pradeep Auto and Matthew Peterson are independent brokers focusing on disability and life insurance. They excel in securing coverage for physicians, including those on visas like J1, H1B, etc. If you're very healthy with limited or no medical issues, approval is likely 5 minutes. I mean, who wouldn't love that? And even if you aren't as healthy as you once were, you can trust that Pradeep and his team at PKA Insurance Group are ready and willing to help you. Reach out to PKA Insurance to discuss your disability or life insurance needs by calling 1-800-258-1018 or emailing info@pkainsurance.com. Hey, money best friend, we want to buy you a drink.
On this show, we are all about spilling the tea on our finances and our personal lives, but we also want to share a little bit more tea with you. Basically, we're trying to give you a free drink on us.
All you have to do in order to put your name in this drawing for a free drink is to leave a review.
Hopefully, you'll give us 5 stars and share this podcast with others that you know. Whenever you rate and review the podcast, it just makes it easier for other people who maybe haven't heard of us before to find us.
Rate and review, subscribe to the podcast, and don't forget to share with your girlfriend. Cheers. All right. Oh my gosh, Lisha, I am so happy to be on this podcast episode with you because, I feel like I need to know what's going on in your life. So can you give me a life update here?
Well, it's interesting. So one of the administrators where I work asked me for a copy of my CV. And I was like, okay, I'm going to send it. Usually when I have a CV or resume or whatever, I try to make it a point to update it each year just because there's talks that I've done or things I've published or whatever. So I was looking for my CV in my computer documents and I realized that I didn't have one for 2024. So normally when I update it each year, I'll put like A. Taylor CV 2023 or 2022. And I couldn't find one for 2024, which to me was like, okay, you haven't updated it yet. I spent some time and I was like updating my CV and like putting new stuff on there. I just took a random scroll down it just to make sure everything was fine. And I was looking at my medical licensing information and I realized, Brittne, that my medical license is about to expire. And so like literally it expires like June 30th of 2024. And I was like, so that's a problem. Given that I currently work in the state of Georgia, I should probably make sure that my license doesn't expire. Then I was like, okay, I'm going to go online and just renew it. Right. And I couldn't figure out how to do it. And I was like trying to get all these documents. And then the state of Georgia like switched to a new system. So I had to remember my username and password, which we've talked before about my struggles with that. And so then once I finally got logged in, I was trying to renew it. It didn't give me that option to renew. Like it clearly showed my license and it showed the date it expired. And I don't know if maybe it's just not available to renew until like 60 days ahead of time or something. Maybe that's the situation and we're recording this in advance. And so I guess it's not quite at that 60-day mark. But yeah, I need to apparently renew my medical license. And so that is what I'm doing with my life, trying to figure that out.
I'm at this stage as well where I need to update my credentialing at the various hospitals that I work at, and I'm not the best with emails. And so they're like, Dr. Halford, did you get this email that I sent you 2 weeks ago? So I completely understand of like not keeping track of some of the dates for our employers and to maintain our abilities to doctor. You'll get it done. I have complete faith in your abilities, Lisha. So
Well, I have to get it done if I want to continue to have a job and like practice medicine. So, yeah, that's on my to do list. I also got an email that I need to renew my vehicle registration
mm,
because I don't know about you, but it expires like each year, every 2 years on your birthday.
hmm
My birthday's coming up in June. So I was like, okay, how many more things do I need to renew? This is like, I'm like, man, all these little ancillary fees start to add up.
So, one of the things that I would just encourage you to do, make sure you do it like well before, as far as your renewal for your license, for your vehicle registrations and all of that before your birthday. Because at least for me, I was able to do it online. It was quite easy. They just like had all the information, but my husband waited for later and we had to actually go to the DMV, which is always a headache. So, just try to do it. Just try to do it as soon as you can. All
Man.
right. So it sounds like we're talking about some things that are going on and kind of upsetting our life a bit, making things a bit more challenging. What about your money? Like, do you have any money mishaps or confessions for this week?
Unfortunately, I do. So I have an FSA account, which stands for Flexible Spending Account. So this is a healthcare FSA, which is available to most people who are employed who don't have a high deductible health insurance plan. And so because I have a regular health insurance plan, I have the ability to put money into what's called an FSA account each year. It allows me to pay for ancillary healthcare expenses like copays, doctor's visits, and prescription meds or anything like that on this card in a tax free manner. And so each year during open enrollment, like in the fall, your job, and just like my job did, will ask you, do you want to put any money in an FSA account? If you say yes, then they'll ask you how much you want to put in there. And so my money mishap is that I cannot remember how much I put inside the FSA account. And the reason why that's a problem is because with an FSA, at least at my job and most jobs, they'll mail you like a debit card. And so it's like a debit card that you can use to swipe for like healthcare expenses. When you go to the doctor, as I mentioned, and you have to pay a copay, you can use that card instead. And for me, I've been utilizing healthcare expenses. I think I talked before about how I was like having to pay out of pocket for like my eye exam. And then, I just ordered some more contacts. I had to pay part for my contacts. I'm a huge proponent of therapy. And so I make it a point to try to, see a therapist every 2 weeks and just stay on the right track with that. And so I've been utilizing healthcare expenses. And Brittany, I don't know how much left I have on this card. I guess one day I'll swipe and it just will get declined and that'll be. But yeah, that's my money mishap. I should have kept better track of how much I spent on this card.
So, is it a link to an online portal where you can go in and see how much is available?
It probably is. The problem is that I have a new job that I didn't have last year. And so now I've got to do the work of figuring out like where is that portal? How do I log in and do all of that stuff? And then I sort of started my current job at an odd time. So with an FSA funds, you're supposed to use the money during that calendar year, but they give you usually like us a few months
Hmm.
so that if you didn't use all the money from the previous year, you still have the ability to use that money during the first part of the year.
Hmm.
So another complicating factor is I can't remember how much I had left over from the last year. And so it's just like, okay, how much in total do I have available? You're right. The solution to this problem is to find whatever portal this is linked to and go in and create a username and password, which again, I've had problems with, and look at the expenses. Although I'm just tempted to just try to swipe and get declined, although that is embarrassing in its own right. People are going to look at me sideways, but you know what? Whatever. It is what it is.
Well, at least you know like what the consequences are of, the alternatives. So you just choose the direction and deal with the consequences. So for me, my money mishap this week is having to open up another bank account. And for many of you, you may think that that does not actually sound like a money mishap. But one of the things that I've been trying to do in our finances is decrease the complexity, especially as we go to estate planning. Like our estate attorney, they need to have all of the accounts listed because we're putting those accounts into a trust. And so a trust is basically a way for us to protect our assets so that when we pass on, we can pass on our assets without our family going through probate. And because our lives are complicated, we had one company for, our student loans, refinancing, one company for the mortgage that we currently have for our property. And now you all know that we're purchasing another home. I actually have to open up a new bank account with the bank that we're getting our mortgage from. And it's just a bit frustrating for me because when I interviewed the various banks for our mortgage to understand, okay, what is your process? Is this someone that I want to work with? Do you sell the loan, etc.? I specifically asked them this question, and I think I misinterpreted the response that I got from the mortgage lender. And in fact, I do have to open up another bank account. So this is just going to be frustrating because now I need to put that bank account in the trust and tell our estate attorney. And now I got to monitor that account. And so I'm just a little bit frustrated that I didn't understand what was required before I moved on and signed on the dotted line for this mortgage. I'm still very grateful that we're able to get a home and that there's a bank that's going to lend to us, but I am a little frustrated that I have to now open up a new account with this bank and be mindful of what some of the nuances are for that account.
You know what? As I hear you talking about it, I can understand how that is annoying and frustrating and unexpected. But at the same time, I kind of want to give you and your husband some props here because I think a lot of doctors aren't doing what you have done, which is like having all of their estate documents in a row and like protecting their money and their assets by putting it into a trust and then being diligent about updating that trust periodically. Like there are these aspects of estate planning that a lot of physicians know they need to do, but haven't yet done, myself included. And so I just want to give you your props of saying, like, for most people, when they get a mortgage, they're just like, okay, I need to open a bank account at the mortgage company's bank. And they just do it. And it is what it is. It's almost like ironic because you're frustrated because you actually understand the financial implications of doing that versus a lot of people are just like, what's the problem? But you understand, okay, in order to have my ducks in a row, I actually have to have this. And I need to put this bank account into this trust. And I need to make sure that this is protected. And I need to make sure that I'm doing this and this and this. And a lot of people aren't doing that, partly because they don't understand the value or may not fully know all of the benefits of doing so. And you sort of skirted by something you said so that my family doesn't have to go through probate. I would venture to say that there's some people who don't know what probate process is, right? And so again, I think a part of this is like, because you know so much, you are annoyed by things that other people probably wouldn't be annoyed by. And just so that our audience is on the same page, probate is this process that you go through whenever somebody passes away. So if they have assets, then probate is the process of figuring out, okay, do you owe anybody any money? Because when you pass away, your debts are paid first. And then do you have a living will? If so, how is the money and the assets being divided up? And it can be a very long, drawn out process that's public, right? That's how people can start to understand what happened with celebrities, assets and bank account. A famous case that comes to mind is the whole Michael Jackson case and how he didn't have a living will or all of his estate planning stuff in order. And so his information was very public and he went through this long drawn out probate process. And you are basically trying to avoid that by having all of your ducks in a row. So this is me giving you props for that and saying also, I am sorry that, there was another annoyance, but I'm also really impressed because our financial focus for this episode really sort of ties into that because we talked on the previous episode about should you buy or keep renting and some of the personal factors that are involved in that. And for this financial focus, we're sort of answering a different question. We're examining some of those economic factors. And I think really trying to answer the question of, is this necessary? And if you do want to do this, whether it's necessary or not for you in terms of being a key to building wealth, if this is something you want to do, as a lot of people want to buy a home, what other things should we be considering from a financial standpoint? And we've all just learned that being very clear on asking the mortgage company, do you need another bank account, should be on that list.
Well, Lisha, I want to pause to say before we move on to our financial focus, thank you. Thank you for that reframe. And, I know you're frustrated about your FSA spending, but girl, that was like a therapy session for me right there. So it's like paying off. I appreciate that. It is important that we reframe and focus on the positive. And thank you for just like highlighting all of the things and celebrating some of the wins that we have in place, because sometimes it can feel overwhelming to have to do this additional thing or be burdened by this without acknowledging all of the factors and things that you have taken, the tasks that you have completed to get your family in a better financial situation. So I appreciate that.
As physicians, one of the most important things that we can do is make sure that we secure our income, because a lot of our financial plans are contingent on our high doctor income. One of the things that you will need to do is make sure that you get long-term disability insurance.
Now, Pradeep and his team at PKA Insurance Group have a reputation for putting people over profits and always doing what's best. Do not hesitate to email PKA Insurance and his team today.
They will help you get the insurance you need with the service you deserve.
Lisha, do you remember that day when you've paid the last penny on your credit card debt and car loan?
Yeah, it just felt so heavy and so constricting. And when I finally did pay it off, it was like a weight had been lifted off my shoulders because I knew that next month I was going to have so much extra cash flow.
You know, that same narrative is something that is echoed by a lot of the clients I have helped to pay off their debt. And I recall receiving that letter in the mail from SoFi. It said, "Congratulations, your loan is paid in full."
If you can identify with our story, we've got a product or a solution for you.
We've created the Debt Payoff Bootcamp, which includes the joyfully free accelerator that helps you get control over that consumer debt, those car loans, without sacrificing joy. And it includes student loans made simple.
Yep, that's right. Student loans can be complicated, but don't worry, I've got you covered. In this Student Loans Made Simple series, we give you the high yield information that you need to create the plan that's right for you.
We have the tools, the strategies included in this debt payoff course that's going to get you to financial freedom.
Head over to wealthmindedmd.com and click the link to our Debt Payoff Bootcamp to start your transformation today.
All right, so now moving on to our financial focus. Lisha, you set us up quite well. We spoke about the personal factors before. Now we're going to talk about some of these environmental factors, some of the market analysis and the property factors that play into that decision of whether you should buy or rent. And as you all know, if you've listened to this podcast, I am in the process of purchasing a home. And these factors, is this an appropriate time for us to purchase a new home? Or if you've been renting for a time and you're considering purchasing a home now, is this an appropriate time for you to buy a home and stop renting? And I think that analysis, yes, depends on who you are as an individual, what you have in the bank as far as your savings amount for a down payment, what is your credit profile as it comes to your credit score and your debt to income profile. But really, the market also plays into this decision. And the market for us was one of the biggest factors. It's something that I still consider is I'm not sure if this is the right time for us to be buying the home, but of course we're buying the home. So, Lisha, I know that, you're currently renting. I'm in this process of buying. What do you think are some of the key market factors or property factors that a person should consider?
Yeah, so I think biggest question to ask yourself is now a good time to buy, right? Is now a good time to buy? And I think there are several things to really consider that can help you answer that question. The first thing to consider when answering that question is now a good time to buy is are homes affordable in your desired area, right? Is it even possible and feasible for you to buy, right? When I think about the fact that I used to live in California, I used to live in LA, specifically West LA, which is the most expensive part of LA. All of my colleagues were like, look, I'm never buying a home. They were like, they already accepted. California is too expensive. Look, Lisha, I'm going to rent for the rest of my life. I'm going to just invest some money on the side. It is what it is. And so they already sort of realized that maybe homes aren't affordable in their desired area. I now live in Atlanta where homes are much more affordable. That doesn't mean that they're cheap by any means, but they're more affordable than, let's say, when I compare home prices in Los Angeles. And so the first question is really, are homes affordable in your desired area? And I think in order to really answer that question, are homes affordable? It's not only just, well, what is the home price for the type of home I want? It's also, okay, what's the interest rate? Because a lot of people, when they're buying a home, they're not paying cash for it. Usually people are borrowing money to pay for a home in the form of a mortgage, right? You put down a down payment, then you borrow the rest of the money from the bank in the form of a mortgage, right? And the bank is not lending you that money for free. They are charging you a fee in order to do so. And that fee is called interest. And so the higher the interest rate on the mortgage, the more you're going to end up paying. And if you've never purchased a home before, one of the things you may be surprised to learn is that the bank is really clever about how they charge for that, about how they make you pay for the interest. Usually they front load it. And so if your mortgage payment is like $3,000 a month, usually like $2,000 of it is all interest. And then like 1,000 or maybe even less of that goes to the principal amount, so the amount that you actually borrowed. And then as you continue to pay more goes towards the principal and less goes towards the interest. But I'm saying this to say, as you're thinking about, are homes even affordable in my area? It's not only what are the home prices, but what are the interest rates on the mortgage that I might need to get in order to be able to purchase this thing in the first place. It's interesting, Brittany, because you brought up the fact that I renewed my lease, right? So I'm still renting. And one of the reasons is because I was like, yo, this is not a good time for me to buy, partly because of this reason. The interest rates are really high. And so for that kind of home that I would want, an interest rate difference of 1%. So going from an interest rate, I think at the time of this recording, average mortgage interest rates are around 7%, right? So when you compare that 7% that it is right now to the 5% that it was last year or the 3% that it was during the COVID pandemic, that can result in a difference of hundreds, if not thousands of dollars that you're paying more per month. So that higher interest rate, even if it's just 1% higher, can really result in hundreds of dollars up to thousands of dollars more that you're having to pay per month. And so for me, it was like, okay, when I factor all of those things in that mortgage payment, I don't know if I could afford it right now, or it's not fitting into my budget based on my other financial priorities. And so for me, one of the first things, like I said, to consider is, are homes affordable in your area? And that includes the purchase price and the interest rate.
Ah, Lisha, so these interest rates that just hit me to my gut because, all right, people, you ready for a story? So, we're purchasing our home off market, and it's such a blessing. And we'll talk about why that is a blessing. So, off market basically means that it is not listed on any Zillows, any Compass, anything. It's not listed on the MLS right now. And now we found a home that someone wants to sell, but they did not make that public, which is a huge blessing for many different reasons. However, because of that and some of the other nuances that maybe we could talk about at another date, we have a prolonged closing, meaning that we're not going to close on our home until later. So therefore, we weren't able to lock in our interest rates. Typically, you can lock an interest rate for about 60 days with the bank. If you have an extended lock, then they'll charge you additional fees. Now, everybody and their mama, meaning the realtor and the lender, thought that interest rates were going to go down because now the economy is doing better. We're more outside of this COVID period in which inflation rose and the banks were really tightening down on lending because they didn't want to have inflation continue to rise. And so they were trying to control inflation. So now that we thought that we got more control over inflation, it was predicted that the interest rates would go lower. However, there were new reports that inflation hasn't really been controlled as much as we want. So the banks locked down their rates again, which means that interest rates rose. And I received an email from our lender that says, Brittne, I think we should lock your rate now because the interest rates are skyrocketing. Now, I don't know about you, but I don't want to hear the word interest rates when it comes to my home loan and skyrocketing in the same sentence. Right. And so we actually locked in at a little bit higher rate than what it was a day prior. And that made a difference of $300, which is manageable for us. Like you can increase the amount of our mortgage payment by $300, but say that had prolonged and interest rates rose even more, then you're right. It would have been thousands of dollars that would have dramatically changed kind of this decision, this computation of whether we should buy this home or not. So interest rates are really, really important. And that's one of the key factors that's playing into this uncertainty about, is now the right time for us to be purchasing a home?
Yeah. I want to say something here really quickly is that sometimes you just don't know. Like you cannot predict what interest rates will be. And I think you just told a beautiful story about how you can try to predict and sometimes you guess wrong.
Yes.
My brother and my sister-in-law, they purchased a home during the pandemic, or I think right before the pandemic, if I'm not mistaken. They just got a really low interest rate. I remember that. Their interest rate was like 2 or 3%. And nowadays people would kill for that kind of interest
Mm-hmm.
rate, but that is not the case anymore. And I think you're articulating like, yeah, even if you just increase the interest rate by half a percentage point, that can result, as you mentioned, in you paying hundreds more dollars per month. And I don't know about you, but like, obviously as somebody who's not married, the finances fall on me, right? I'm taking care of my own finances. And so when I'm thinking about, can I afford a home? I'm thinking about, well, what about my income? Because if I'm trying to figure out, okay, am I going to keep renting or am I going to buy? The next question is, can I afford to buy? How much money can I put towards housing and still meet all my other financial goals? And for me, it's like when I ran the numbers for the kind of house that I would want, which is one that's like maybe costs around 2 times my income, that's the general rule of thumb. Try to stay within 2 times your gross income. You can push it up to three, maybe if you need to. If you live in a high cost of living area, maybe you might have to push it up to four. But the goal is to stay around 2 times your joint household income. And so I was looking at a house that cost around that amount. And I was like, yo, if I bought a home right now, the amount of money that I would just spend in the mortgage alone is substantially more than I'm paying in rent. And then when you factor in, all the fees and all of this other stuff associated with owning a home, that's substantially more. I I was like, yo, if I bought a home, I would have to then work extra shifts on the side, try to negotiate a bigger raise, like all of these things, or I'd have to cut back. Maybe I wouldn't be able to travel as much. I wouldn't be able to put as much towards my student loans. And so for me, it was like, yeah, I want to eventually own a home. That is definitely a goal of mine. But right now, given this high interest rate environment, I'm not sure if it is the right time. So that's sort of the calculation that I had in my mind because for me, at least where I live, rent was just so much cheaper. And that's not always the case. But for right now, for me, renting is so much cheaper. And I know you just can't compare the mortgage payment to the rent payment. But when you compare, the mortgage payment plus the fees and the property taxes and all of that stuff that's associated with owning a home to just a set fee from rent, for me, there was such a drastic difference that it made so much more sense for me to keep renting.
Yeah. And when you're doing that calculation, you want to think about how much would it cost for me to rent a comparable size home that I would purchase or comparable size space that I would purchase. And you're right. Right now, statistically, rents are much more affordable than a home. And for me, at least when I was a renter, I acutely recall I was at Wash U and I got this letter because a new company had purchased our apartment building and they were increasing the rent by like $500. And so I'm thinking like, okay, should I move? Should I just pay the $500? Who can I share a room with? Like, this is my last year. I don't really want to move because there's fees and time associated with that as well. So sometimes when you're thinking about this calculation of renting versus buying, again, you want to think about it logically from a numerical perspective, but also psychologically. I know that many people are displaced from their current homes because their landlord is also increasing the rent. And what may have been affordable is not fixed because you don't control it versus when you purchase a home, you're buying in depending on the type of mortgage that you get, but you're buying in for a fixed amount every single month, at least for that mortgage payment. And then you'll have some changes in like insurance costs that's going to change and increase and property tax that'll change and increase. But at least it gives you a strong foundation for which you can create your spending plan. When you're renting, it's out of your control. So it's, hit or miss of like where you land on that. And I can really recall the visceral feeling that I had when I received that letter that my rent was going to increase by a significant amount that I had not previously budgeted for.
Yeah, yeah. So I think you bring up a good point in that even though renting may be cheaper right now for some people, keep in mind that because you don't control it, the cost of rent could increase. One of the perks of owning a home is you having more autonomy. The downside of owning a home is that you have to pay for everything and there's all these fees and things like that associated with it. So it may not be a slam dunk either way. And this is why we're sort of taking people kind of through this calculation of figuring out, okay, well, what may be best for you? Right. And so, we talked about are homes even affordable in your area? Is rent even affordable in your area? I think another thing to consider is whether or not it's what we call a buyer's versus a seller's market. A buyer's market is when it's more favorable to be the one buying. A seller's market is when it's more favorable to be the one selling. And really, how you answer that question is when it's a buyer's market, that means there's a lot of homes for sale, right? And so you can try to like negotiate down a good price. When it's a buyer's market, homes are sitting on the market for a long time. And so the sellers get antsy and more likely to give discounts. It's a buyer's market when there are lower interest rates. You can actually argue that lower interest rates helps both the buyer and the seller. But when the interest rates are lower, people are more likely to buy. Why? Because when interest rates are lower, their monthly payment on the house that they would buy would be lower. And so they're more likely to say, hey, it's more affordable. And so
Mhm.
just looking at, is it a buyer's market? For a lot of people right now, it's maybe more of a seller's market where there's less inventory and homes are sort of flying off the shelves and the interest rates are sort of in fluctuation. And so you have to think to yourself, okay, is it a buyer's market or a seller's market? Am I likely to be able to get a good deal? I remember some of my friends talking about when it was a buyer's market, they negotiated in closing costs. They were able to negotiate down the home price by thousands of dollars. They were able to shop around to different banks and get a great mortgage rate. They had all these perks with buying. And I talked to my other friends who bought during a seller's market, and let's just say they've had a tougher time. There's been bidding wars and, the prices have fluctuated and they've had to pay thousands of dollars over asking, right? They had to remove contingencies or protections in place for them as the buyer. And so, like, it's been very interesting to see how these market shifts have come into play and how they affect whether or not people want to buy or sell a home. And so I encourage you as a listener to really think about, okay, is it a buyer's market or a seller's market in my area? And how might that affect me personally?
Yeah. And I love that you added on that qualification of in your area because each area is going to be different. Yes, there's going to be generalizations of if we're in a high inflationary environment and the banks are kind of locking down on loaning out money, then the interest rates are going to be higher, as we talked about in the first factor. However, the market fluctuates depending on where you are. And where we are here in Boston, people are doing exactly what you're saying. Even in this kind of seller's market ish, because the interest rates are still high, is that they're waiving inspections. And so when you have an inspection, basically it gives you insight in some of the issues that lie in that home. If you've never lived in that home, then you don't know what was hidden behind the walls there. And so when you waive an inspection, basically you have to make an additional calculation of how much do I have in this emergency fund and this reserve? Because those home repairs, what you might have been budgeting in, so typically it's like 1.5% of the home's value per year of repairs. Thankfully, we have not incurred that, but that's what is on average. You might have to beef that up a bit. You might have to go up to 2%. So that you can actually have enough in reserves for you to do those home repairs if you have waived the inspection. So these are some of the things that have not only like short-term consequences or implications, but also in the long run on your finances. And you really just want to understand, are you prepared for that from a numerical perspective? And are you prepared for that from a mental psychological perspective? Because if you have this huge leak in your home and you have to bear the financial burden of that, what stress is that going to impose on you? And can you actually bear that stress right now in your life?
Yeah, I think that's a good segue into like, there are all of these costs that you have to pay for when you even buy a home. And then there are costs to even consider as you maintain the home. And I think these are things that aren't often talked about. I think Brittany have like a lot of experience with this in terms of when you decide to buy a home, you're not just saying, okay, I'm going to put down a down payment, or maybe as a physician, maybe you get a physician loan and you don't have to put down a down payment. There are all these other costs that are associated with that, right? You need to pay for the inspection, as you just mentioned, so that someone can look at the home and look at how it's built and look at what might need repairs so that you can understand what you might need to pay for. You need to pay for an appraisal so people can make sure that the house is actually valued at the price that you're willing to pay for it, right? You got to factor in escrow fees. You got to factor in realtor fees, right? As the buyer, usually the seller is paying for the buyer's agent, but that's changed recently with all of these like lawsuits in the real estate world, which we won't get into. But my point in saying that is there are costs that are associated with just buying a home. When I spoke to my friends who bought home when they finished training, I asked them, hey, aside from the down payment, how much money do you think you spent in other costs, just all of these fees and things, just buying the home? You know what they told me? Probably at least 10,000, maybe 20,000.
Mhm.
And I was like, what? I was like, this money didn't even go towards the home. This wasn't the down payment. This was like just the fees and stuff. They were like, yeah. And I was like, oh, let me renew my lease. I guess we're renting for another year. So I was just floored. And I don't know, Brittany, maybe you can talk about your experience, but like there are the transaction costs of just buying a home that seem to be quite substantial.
Yeah. I think because many of us have rented for some time, we are more accustomed to paying the last month's rent if it's required and paying that security deposit. And so you come into it with a better idea of what are some of the estimated costs that will be required for me as a renter. As a home buyer, I was blindsided to some of these costs because I had never done this before. And so you have all of these fees and they're not as transparent. For us personally, on the purchase of our current home, it was about 2% of the loan amount that we had to pay in our closing costs. It varies. I think the average is about 1.5% to 4% of the loan amount that you'll pay in closing costs. Then there's like, well, do you want to add on this optional title insurance? And here's why you might want to pay for the title insurance, just in case when you try to sell the home, that if there's nothing that came up during our initial investigation of the title, this protects you and the value of your home to make sure that there's nothing wrong with the deed to show that you actually own this home outright. And so then there's all of these other optional things that when you don't have experience and no one's telling you what is the percentage of the likelihood that this might occur, you often buy in because of that uncertainty and you want to kind of protect your asset in that way. So, Lisha, I think you are 100% right that there's more transparency when you're renting a home than when you're purchasing a home because you don't factor in all of those additional costs. And for us, it was about 20 grand with the purchase of our first home that we had to pay outside of whatever that mortgage payment will be. That includes the property tax and all the other escrow.
Yeah, I mean, the problem is that as I'm adding it up, it's adding up, right? So if you're spending, 10 to 20 grand in closing costs, then you got the down payment, right? And then you are getting the mortgage from the bank that you got to pay back. But then you mentioned something else, right? The property taxes and the homeowner's insurance, right? That's not just like, oh, another $100. Like that can be substantial. For a lot of people, that can add on another 500 per month to $1,000 or more per month. So it's like, okay, the mortgage itself might be 2 grand, 3 grand, whatever it is, depending on the size of your home. And then it's like, okay, we'll add another thousand on top of that for property taxes and homeowners insurance and flood insurance or whatever kind of insurance you need based on where you live. So it's like for me, Brittany, I'm like, what? This is an investment that apparently I'm not ready for. So I was just like, okay, let me let me save my little pennies, let me save my coins, invest and maybe get a side job and, marry somebody rich. Like it's coming. I'm
Okay.
starting to see why my friends who bought homes are so stressed.
Yeah.
So
You're right. And you mentioned, okay, let me invest a little bit more. A lot of people think about their home as an investment, but really your home is a liability unless it's cash flowing, right? And you have to maintain that home to a certain condition and stay in that home for a certain period of time in order for this to be an investment. Because, yes, there's some market appreciation, but the market for real estate, depending on where you are, may not appreciate as much as what your investment might return in the stock market. So, all of what we're saying is that this calculation, we know, at least for many of us, you might have that home buying itch. We just want to make sure that you are very much aware of the property factors and the market analysis that goes into this decision, and that you can make an informed decision that will serve you today and serve you in your future and make a wealth minded money decision.
you know what? I think that's a good point, and it brings us to our next segment, which is our Wealthy Wonders segment. So we got this question, Brittany. I am very curious to get your take on it as someone who is a current homeowner and is in the process of buying another home. And this particular person asked, is buying a home the key to building wealth? And I'm just very curious to get your take on this.
Yeah, I think that's a really great question because historically, what we've seen is that homes are passed on to their future heirs upon a person's death. And it has been a historical foundation to building wealth. I think about my mother in law, in which she purchased this home in Brooklyn, New York, when my husband, I don't think he was even born yet, right? And so now he's almost 39. So she's had this property for 39 years. And when she purchased the property in Brooklyn, it was about $50,000. And now she's done minimal renovations to it. But the value of that home, because of market appreciation, is almost around 500K. I think the last time that I did this evaluation, if she passes that home down to those who are her heirs, as long as she passes it down correctly through a trust, that will be money in which they can use to build wealth. So, all of that to say that historically, homes have been a foundation, a key component of building wealth, but I don't think that they are the only component. When you're considering your investment portfolio, a home can be part of that investment, right? If you're thinking about, okay, this is going to be one way to appreciate that asset through just market appreciation, but there are so many other ways to do that. You can have investment properties that generate cash flow income, right? And you have this investment income that you are investing in the stock market or in other assets that are generating a compounding interest. And that could just be through investment properties or equities, through a stock market or other types of commodities. And you could be a renter. So it can be used as one of the pieces in which you build wealth upon, but I don't think it's the only way to build wealth.
My answer to this question is it depends. I really do think it depends. And I think, by virtue of both of us being physicians, we're in a different financial position than the average American. And I think that for the average American who maybe makes the average household income, which is around $60,000 a year for the average American household income, they may not have enough money left over once they pay their bills to be able to invest excess money. And so for them, the only quote unquote investment that they have is the equity that they're building in their home as they pay off their mortgage. Because one of the things that a house is really good for, it's almost like a certified savings account, right? It's like you have to pay your mortgage each month. And by virtue of paying your mortgage each month, you not only get the privilege of living in that house and maintaining the house, but you're also building equity. Equity is like another form that we call, like your net worth, like you're building your assets, you're increasing the value in which you own in that home. And I think for the average household American who, like I said before, may not have extra money to put away for investments, may not have the ability or may not be in the financial position to be able to invest excess money, buying a home and, paying that home off over time and having an asset that is worth hundreds of thousands of dollars may be their key to building wealth. But one of the things that I think makes us different is we're physicians, and not saying that everybody listening is a physician. But I think if you're somebody who is a high income earning professional, you have a lot more options available to you. And I think for us, buying a home is a way to build wealth, but it may not be the way or may not be the only way. Especially if you're someone who lives in a high cost of living area, like I mentioned before about some of my friends who live in West LA, or some of my friends who live in New York or who live in Northern California in the Bay Area, or maybe you just live in some area where houses are not as affordable. There are other ways to build wealth. You mentioned some of them, right? You can invest in different ways and in different things and build wealth that way. But I think it really depends on the person's financial situation. And I think one of the things that you brought up was that sometimes buying a home may not necessarily be considered an asset, right? There is this discussion in the financial community about whether or not your home is really an asset, whether or not your home is really something that you can consider a good investment. And the reason why there's this discussion is not because homes aren't valuable and not because homes may not increase in value over time. It's because oftentimes we spend a lot of money on our homes and we would have come out better if we had put that money in something else, right? I think when people are buying a home as an investment property, right, they're planning to rent it out, they're not as apt to be like, "Ooh, I need new flooring," or "I need the newest refrigerator," or "I need new lighting," or "I wanna paint the walls," right? You don't care as much about that stuff. But when you buy a home to live in, right, and it's something you're gonna see every day and be inside every day, all of a sudden you do care about those things. And so a lot of people end up treating their home like a consumption item, right? They put a lot of money into making it look good and to their standards, and I'm not saying that there's anything wrong with that, but I am saying that sometimes the amount of money that they put in it doesn't necessarily increase the value, the overall value of the home. And so they end up spending a lot more money than the house is increasing in value, if that makes sense. And so I think for some people, it's more of a consumption item. And for other people, it can be an investment property. The point here is that buying a home is a key to building wealth, I think, but it may not be the key. And Brittany, I have a follow up to that. Like you, I think, agree with me in that it's a way, not the way. But yet you and your husband are buying your second home. So is it your way? Like, help us understand.
No, it's not my way. I'm doing all the other things. I'm investing in other forms of assets. And honestly, Lisha, this is something that plagued me a little bit in making this decision of should we purchase another home? I'm going to be completely transparent here. So you all are getting all of my business. When we came into the opportunity to purchase our current home, it was in 2022 when we purchased it off market. And although it was right at the tail end of the pandemic, like interest rates had started to rise. So we still got a great interest rate. However, it wasn't as good as when it was when people got into the market in the 2020s, 2021. And a lot of where we live is old money. So when we're talking about building wealth, they've held these properties for 30 plus years. I say that because when they're renting out the properties, even though they're owners of them, but they're not living in them, they're able to keep rent pretty low because they are no longer paying a mortgage. They're just having to pay the home repairs, the property tax, and the insurance. So as we transition into a new home, it's like, what do we do with our current home? And right now, we're not able to cash flow it, meaning that what we're going to charge in rent in order to be commensurate with the other surrounding rents will not cover the entirety of all of our expenses. So it is effectively, even though we're not living in it, a liability. So that question is, okay, well, how long do I want to hold this liability until it's able to become an investment? And I don't know, to be honest with you, Lisha, like we're going to keep it around for now And I do see that it's a fantastic property, like our location of where we are, right next to the hospitals, walking distance. We're surrounded by many parks. The bus line runs right in front of our doorstep and takes you to the medical area. So I'm sure we would be able to find renters for an extended period of time. We just have to wait for market appreciation for us to either sell it. And we talked about some of like the cost of purchasing a property, but there are also costs to selling a property. And if we were to sell it because of closing costs, because of the cost that we would pay a realtor, we would actually lose more money than what we would lose from a month to month basis. So I do think that if we were to hold this property long enough for the rates of rent to catch up with our mortgage, it would be an asset. But right now, holding on to our current property is actually going to be a liability. And we know that when we purchase a home to live in, like that's a liability as well. So I say all of that to say that not all of your decisions that you make will make sense mathematically. And at some point, I may change my mind and we'll have to now have a discussion with my husband to see where he lands on it. And they may not make logical sense in the moment. And it might be this is something that you want to do for a psychological reason. So we're purchasing a new home because there are other things that that home will provide us. And I have the understanding that neither one of these homes is really an investment at this moment.
Well, I appreciate your transparency. And I think you highlighted a few things, right? Number one, sometimes you don't always buy a home for the sole purpose of building wealth. Sometimes you buy a home because you need a place to live, or you need more space, or you just want to, or whatever the case may be. And I think that's fine. And what you're saying is that when you make those decisions, sometimes the math may not always add up. In other words, sometimes it may cost you more. Right. Sometimes buying that home and having that mortgage with all of those fees costs you more than it would cost you to rent. Sometimes buying a new home, even if it is for a legitimate reason, whether it's more space or whatever, sometimes that costs you more money. In your case, you said, "Hey, Lisha, I've got a home that I currently live in. We're moving into a different home." And you and your husband had this dilemma of, do we sell the home that we are currently in or do we rent it out? And it seems like you were in the position where you said, "Hey, if we sell it, given the fact that we've maybe been in this home maybe only a couple of years, we don't maybe have as much equity. And so if we were to sell it, then when you factor in all of the costs associated with selling a home, we would be in the hole, meaning we would have lost money. But at the same time, if we hold on to this home and we try to rent it out, we can't just charge whatever we want for rent. I mean, I guess you could,
Mhm.
but maybe you wouldn't find a renter, right? You need to make sure that the rent that you're charging is commensurate with the rents that everybody else is charging. And your
Mhm.
dilemma was that, hey, this home is really valuable, but nobody else really cares as much about charging market rent. And so, in order for us to charge a rent that's competitive with everybody else, we sort of have to charge at one level. And that level we have to charge doesn't necessarily cover all of the costs associated with maintaining this home, let alone also having a new home. So I hear what you're saying. And I think that's a really good example of just because you buy a home doesn't mean that you have something that is bringing you more money or something that you consider an investment. I think people go back and forth. Some people might say, "Hey, Brittany, well, you have two homes. Technically, they're assets, even if they're costing you money." Versus other people may say, "Hey, you have homes and they're costing you substantial amount of money. And so they're liabilities." So I think there's some like language stuff here and tomato, tomato sort of thing. But I think the overarching point is that you could still have something that you consider really valuable that's still costing you money. And you
Mhm.
constantly have to do that analysis of, is it worth it for me to maintain this home? And, I really appreciate you bringing this up because I think a lot of physicians are in this position, right? A lot of doctors bought a home in training or bought a home early in their attending career and for whatever reason are no longer staying in that home. Maybe
Mhm.
they outgrew it. Maybe they moved away. Maybe they decided that they no longer want to stay in that home and they found a better home. Whatever the case may be, they're also in this same dilemma of, do I sell this home or do I try to rent it out? And there are pros and cons to each decision. And I think one of the things that we've tried to highlight in our financial focus is like, okay, let's think through some of these factors. Let's think through some of the economic factors, some of the financial factors. In the previous episode, we said, let's think through some of the personal factors and understanding that sometimes you don't make a decision based on math. Sometimes you make a decision based on practicality and what your family needs. And you just sort of make things work. And so I appreciate you again bringing this up. I know that probably wasn't easy to share, especially to the world. But I think the point remains is that buying a home is a key to building wealth. It is not the key. And sometimes it can cost you more to even have that home.
Definitely, definitely. And, I would just say that if you are thinking about purchasing a home, even if you look at that home as potential value. As you know, I highlighted a bunch of things that we see as being valuable about our current home. You also want to evaluate what are the other homes, what are their values. If you were to do renovations or something like that, what are you going to bring that value up to, right? Because there's going to be a cap based upon the market. If you were to rent that home out, how much would you rent it out? And do you even want to be a property manager? Like, are you going to be able to find a suitable renter? Because these are some things that may introduce a few more headaches. And I just, like you said, Lisha, it's a calculations thing. Now, my burden is how do I leverage the loss, right? This passive loss for taxes and figuring out how to offset some of the passive income. So it creates new dilemmas. And I think we've highlighted that multiple times in this podcast that whatever money decision you choose, make sure that it's a thoughtful money decision, right? And even at such high income levels, you're still going to have dilemmas that you may need to resolve. And I'm hoping that us sharing our journeys help you along that way.
Yeah, you know what? It's one of those grass is always greener, right? Because I don't have a home. And so a lot of my, contemplation, because I'm one of those weird people who sort of like things about money. It's like, how can I do this? Brainstorming. And I'm like, I really want a home, right? Because in my mind, I'm like, I'm this established attending, like I'm making more
Mm,
money. There's this feeling to want to
mm,
buy a home,
mhm.
especially because I'm in an area where a lot of people are buying home, right? So all I can see is your life. And I'm like, grass is greener. Brittany's living it up in Boston. She got 2 homes. And I'm like, man, I'm gonna have to work more. I gotta save more. Maybe one day, I'm looking at all the people who were partnered and married. I'm like, y'all have it so good. Y'all got 2 incomes. All that good stuff, right? And what you're highlighting is, Leisha, look, you don't even know the half of it. Look, now we got to do this. I got to call my tax account. We got to figure out this loss thing. We got to do this. Now I got to find a renter. I don't even really want to do that. And so you're
Exactly. And a level of complexity that you may not need or you may not desire, right? But hey, more narratives for this podcast. And hopefully, not too many money mistakes that I bring up.
no, it's okay. It's okay. That brings us to our next segment, which is our fun money segment. All right, Brittany, what is something fun that you are doing with money?
So, this may not sound fun to some of you, but for me, oh my gosh, Lisha. So, my children and I, we went to Home Depot. Brooke, it's spring here, it's spring everywhere. So, spring showers bring May flowers, and there's some April flowers too. So, Brooke looks around as we're walking home and she's like, Mommy, why don't we have any flowers in our yard? Oh, mommy, I want flowers, want flowers. So we go to Home Depot and I purchase some flowers, but I didn't have the right credit card because I wanted to use a particular one to get like the bonus. It was a bonus category
Look at
for Home Depot.
you. I'm very proud. If you haven't listened to our previous episodes where we were talking about credit card hacks, we're trying to get Brittany on this thing so she can earn some points in travel and luxury. And look at you. I'm proud. Okay, continue.
Okay.
Sorry.
Wait, there's a confession here. So this credit card is a cashback credit card. It is not a transferable points credit card.
Oh, we've got to work. We've got work to do. All right. And we can just tell our editor to edit that
Yeah.
out.
But it's given 5 times cash back, right? So I'm still learning people here. Okay. My to-do list is long. I'm consuming the information as I can. I'm trying to apply it as quickly as I consume it, but there's a delay. So give me some grace.
Okay.
All right. So nonetheless, we go back to Home Depot because I buy the wrong soil. I buy the in-ground soil instead of the potting soil. You may ask, what is the difference? I didn't know either. I had to Google it. Apparently, the in-ground soil retains moisture a little bit more, and plants are highly susceptible to overwatering. So, of course, we don't want to do that. We want to have potting soil that drains well. Nonetheless, I take all this stuff back to Home Depot. I purchase $100 worth of items from Home Depot. I have broccoli. I have kale. I
You're doing a
have two.
garden.
Girl, yes. I'm doing a full on garden with plants as pollinators. We have 2 strawberry plants. We have a blueberry bush. And I'm like, oh, Brooke, I think mommy is over her head.
Wow, y'all got the farmer's market in house.
And now I'm like gardening outside. And my husband is like, hey, what is for dinner? He calls me. I'm like, what time is it? It's like it's 6 o'clock. I have been out there for 4 hours digging in dirt.
Oh boy. Oh boy. I'm sure Kevin's like, what? Wait, hold on. So you didn't cook dinner because you playing with our daughter in the dirt?
It's so funny. But to summarize, I'm spending my money on plants that I hope that I can keep alive and, we can harvest some fruits and vegetables at the end of the summer.
Wait, so hold on. Are you doing a garden outside or are you doing a garden like in pots?
In pots. In pots.
Oh, I see. I see. Yes, let us know how this goes. Maybe I'll have you like ship me some fruits and veggies or something if it turns out something fun that I'm doing with money. So I have a wine habit. I drink a lot of wine. I just love wine. And I am trying to drink a little less wine. I always feel judged whenever I go to my doctor's office and they're like, "How many alcoholic drinks do you have in a week?" I'm like, "Now you know, I'm a doctor, you a doctor. We both know the appropriate answer to write down on this chart. Please don't make me lie to you today. Move on now. Move on. Next question." So, but I I am trying to do better so I can be honest when I go to my doctor's office. And so one of the things that I also love to drink and indulge in besides wine is tea. And so at night, sometimes I love flavored teas.
Mm.
And so my brother for Christmas, one of the things that he bought me was like this assortment of teas, and they were so delicious. And they had all these awesome flavors like strawberry hibiscus and like vanilla
Mm.
peach and
Mhm.
like all of these things. It was like this really cute assortment that I absolutely loved. And so I just bought one. And it was not the cheapest. I don't know what the price of tea that I thought it was. When I was looking on Amazon, because I was looking for the exact assortment that my brother bought me because it was so good. And this is another case of me like underestimating the gifts that my brothers buy me because I don't know how much they paid for it. But when I was looking on Amazon trying to ship it to my house, I was like, yo, that's eh, that's kind of an expensive assortment of tea. I mean, it was good, but oof, okay. But anyway, it's cheaper than, the wine that I consume and purchase. And so I'm buying myself an assortment of teas so that I can drink tea after dinner at night instead of indulging always in a glass or two of wine. So that is something fun that I'm doing with my money.
Ah, I love that. I also really love tea, and I have not spent as much money on tea as I've had in the past. Do you have any like fancy tea pots or cups or anything that you use?
You know what? I used to. I went through this period when I was right before medical school where I gave up coffee for a couple of years because I realized my body was really dependent on coffee. So I gave up coffee. And the thing that I took on at that time was tea. And during that time, my brother said also bought me like this fancy tea set and like all of this stuff. And then I entered medical school and that just ended and I needed to go back to the real stuff. So I got back my coffee habit. And so since that time, I haven't really indulged a lot in teas since I don't have the fancy tea stuff. But it is something I will probably look into now that I really am trying to get more into teas. And I'm still a coffee person in the morning. I'm just trying to think of at night. Part of it is
Mhm.
like the habit of sipping something that I enjoy at night. And so I'm
Mhm.
trying to, like I said, break that wine habit. And I figure if I can just sip on tea, even though it's obviously a very different substance, I think I would enjoy that as well. So trying to get back into that. And hopefully this like tea assortment will help me do that.
Yeah. I was searching for a brand, but I can't find it. I'm gonna have to send it to you afterwards. There's a woman here in Boston who like makes her own teas, and she started the company
Ooh.
after her grandmother. And yeah, it's fantastic. We actually just ran out, so I'll be purchasing some. Maybe I'll send you a little birthday
Oh,
gift.
yes. Please, please. I appreciate that. Look at you. Okay. Thank you.
You're welcome.
All right. That's it for today. Hopefully, you enjoyed our episode and stay tuned because we've got more exciting information coming to you again next week.
Hello, and thank you for listening to our podcast. And because of that, we have something for you, our Wealthy Mind Starter Kit.
Have you ever thought to yourself, I wish I could be better with money? Do you want to start investing and saving for retirement, but keep delaying because you don't know where to start? Our Wealthy Mind Starter Kit is here to help.
This guide will teach you what you didn't learn in your training so you can stop being confused about money and start taking what we call wealthy minded action.
We'll help you become a master of your finances and simplify investing so you can get started today. Take control of your financial future by downloading your free copy of the Wealthy Mind Starter Kit now and start building the wealth you deserve.
Hello, everybody. It's me, Brooke. I'm recording a little disclaimer for my mommy, Dr. Brittne Halford, and her friend, Dr. Lisha Taylor. Just so you know, they're not financial advisors, tax professionals, lawyers, or financial planners. Everything you hear is for education and entertainment. It's not strict financial advice, So use your best judgment, chat with a tax professional, and all those other people that you need to talk to. Thanks for tuning in today. Keep cruising on your journey to wealth and wellness. Bye-bye.
One of the most important things you can do is ensure you have long-term disability insurance. Long-term disability insurance secures your income if the unexpected happens and you are unable to work due to medical illness, chronic conditions, or an accident.
Unfortunately, all insurance agents aren't created equal. Some of them are so focused on making a sale that they fail to reveal certain necessary information, tell you about discounts available, or clearly explain the process. Pradeep Bhado and his team at PKA Insurance Group are different. They have a reputation of putting people over profits and always doing what's best.
If you need life insurance or disability insurance, reach out to Pradeep and his team today. They will help you get the insurance you need with the service you deserve.